Come on in, sit back and relax. You're listening to episode 182 of the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features interviews, news, and analysis on the trends and best practices about wealth management technology. My guest for this episode is Brad Genser, founder and CTO of digital advisory firm Farther. Now, I was a little confused as to what Farther was. I wasn't sure if it was a robo-advisor, was it an online firm, wealth management firm, what were they doing? So Brad did provide a good answer, which you will hear in the interview if I can tease it a little bit. Now, Farther received the $15 million Series A round of funding back in July of 2022 from some pretty impressive VCs, including Bessemer Venture Partners, Coastal Ventures, Mass Mutual Ventures, to name a few. Brad founded the firm 4 years ago. Before that, he was at Goldman for 5 years. Before that, he was a U.S. Army officer for 5 years. Brad has a BS in mechanical engineering from the United States Military Academy at West Point, very impressive, and his master's in mechanical engineering and an MBA from MIT. Now, if you're impressed by that, and if you are an executive of a wealth tech firm that's selling software to RIAs, broker-dealers, asset managers, TAMPs, or others, then you should run, not walk, to our website, EzraGroupLLC.com, and fill out the Get in Touch form on our homepage. Our industry experts can deliver a wide range of advice, including competitive analysis, new product evaluations, market insights, and strategic advice, client buying decisions, integration development services, that's a new one, and more. Every vendor needs these things to be successful, especially when entering new markets. And you can get on the right track by going to EzraGroupLLC.com. Now, a few quick housekeeping notes before we continue. We support here at Ezra Group a number of nonprofit organizations that do some fantastic work for a variety of causes. And one you should check out is the Invest in Others Foundation, which you can learn more about at investinothers.org. Please subscribe to the show wherever you listen to podcasts so you don't miss an episode. All right, now let's kick this thing off.
I'm excited to introduce our next guest on the program. It is Brad Genser, founder and CTO of Farther. Brad, welcome.
Thank you, Craig. Thanks for having me. Excited to be here.
I am excited to have you here. Where are you calling in from?
So I'm calling in from my home in New Jersey, and I'm just outside of New York. Kind of split my time between the office there and in my house. You know, these days being remote and being flexible is a good thing.
Indeed it is. And you are in now snowy New Jersey. Is that correct?
Snowy New Jersey. The first time this year. We've had some and I actually got excited a little bit to go out and shovel some snow this morning. It's very satisfying. It's not satisfying every day of the week, but like a couple times a year, very satisfying.
If it was satisfying every day of the week, we live in Buffalo.
That's right. That's right. There are places for people who find it to be satisfying every day.
Exactly. And I'm usually right near you in New Jersey, but the past couple of weeks I've been in London, so I'm doing my London gig for a while. So we're going to do this international podcast episode.
Well, how's the weather in London?
Privy to it. It's much better than New Jersey. It's not. It's still dreary and gray and in the 40s, but it's not snowing. So, and it's not New Jersey. It's London, which is way better. So I'm excited to be here. I'm excited to be on the program. So why don't you kick us off with a 30-second elevator pitch for Farther?
Sure. So Farther is a new type of financial institution. And, we are a wealth tech firm, but really we are a financial institution. We're an independent advisory firm. We have advisors who are employees at Farther and work at Farther. And right at our core is a wealth tech platform. And it's really designed to bring everything in one place, tie together planning and action. So there's a big gap between planning and action in our industry, and provide clients with broadest access to solutions. And what really differentiates us is technology gives us the ability to provide a little bit better service, more client-focused service. It allows our advisors to be boosted and kind of be more scalable and thoughtful about their business, which is pretty exciting for clients and advisors.
So an independent advisory firm. Well, of course, every advisory firm has wealth tech, so it's not unusual. You have to power your business with something. But what's the primary function of your service? So looking at your website and marketing, I mean, you seem to have a lot of different things going. And you have a lead gen tool, you have an end-to-end digital wealth management platform. what is your primary service delivery or product delivery to the market?
Sure. So if we had to use current day industry terms, and I think it's different. The industry is going through kind of a big transition in its history. If we and just I like to give this kind of overview for people a little bit, who might not be as familiar with the industry. Every sort of wealth management firm spun out of a corporate focused kind of investment bank at first. And then we started seeing the rise of independent advisors who were more focused on clients. And that was the right move. It just wasn't a scalable move because at the end of the day, it was people plugging away at spreadsheets and the technology that was available at the time. And then we had robo advice and more scalable solutions, but they were missing some of that human element. And we at Farther are really here to bring together a solution for people of complexity. Typically, we would in the industry would say high net worth clients and advisors who focus on high net worth clients. So the full suite, investments, trust and estate, tax aware kind of planning is all here at Farther. And every single aspect of what an advisor does and what clients do is integrated into our tech platform. And likewise, our tech platform is built around people, not the other way around.
That's good to hear. You definitely want a tech platform built for tech. You definitely want people using the platform. So you've got on your website, you have advisors and clients as separate sections
Yes.
of the website. So do you sell direct to consumer or is it only through advisors?
So we grow primarily mostly by focusing on advisors. So advisors are currently at other independent advisors. They're at larger financial firms, and they're saying, "Hey, I think there's a big thing happening in wealth these days. I think we can serve our clients better by having a more tech forward experience. I believe I can have more of a focus on clients if I really can use an integrated technology solution." And we provide that platform here at Farther. And just something that you said is every sort of wealth or independent advisory firm has some tech, right? But it's typically unintegrated. It's typically not built from first principles. Our tech is customized or is custom. It was built. We have built every building block of it, and so that it is all synchronized, so that we can do things that other wealth tech firms cannot. We're not stitching together and bolting together solutions here.
Indeed, there are some advantages to building everything yourself.
Yeah.
You get exactly what you want.
You get exactly what you want, and you get exactly what clients want, which is we're here for clients at the end of the day.
The downside of that is that you don't get the broader access to other information. For example, if you were buying a product from a vendor, they've got hundreds of other clients who are then giving them information and updating their product with other features you may not think of. So you don't have access to that. How do you maintain those capabilities, the things you're not getting from thousands of other wealth advisory firms delivering features to a third party vendor?
Well, I think that there's a sort of a difference, and I would say that maybe I'll sort of go back and say, we really are building the experience layer to the financial system, and what we do is we actually reach down for best of breed kind of solutions. So there's no need for me to build a performance calculator, for example. There are plenty of places that do that quite well, and I'd rather reach down to them, but integrate them into an experience that feels totally seamless for the clients and advisors, and that's how we sort of go about things. So we are sort of like, we are hungry, but we are also humble about what we can build and what we should build, and very selective in sort of what we do. But we do want to own that client experience and that advisor experience and make sure that it is truly flawless.
Hungry and humble. That's a good t-shirt. So
maybe I should, Grace will get on it.
Yeah, you guys can have that. It's a free one. So you didn't build your own performance calculation software. You're using that from some other vendor.
That's right. That's right. And I won't name vendors that we use, but they are a top vendor in the industry. Lots and lots of experience, and I'm sure that as you know, and many of the listeners here know, bringing together data from multiple custodians, and we are a multi-custodian platform, is very difficult, and doing performance calculations needs to be done carefully, and there are lots of people who do that very well, and we are happy to partner with them.
This is a tech podcast. You can mention the names of vendors. They'll be very happy to be associated with you. It's funny.
I'm sure they would.
Which other parts of your tech did you outsource?
So, I think that like rather than focusing on what we outsource, I think it's more interesting about talking about what we've actually get to do now, because there have been a lot of solved problems that have been waiting for an integration layer. So we just talked about performance and the ability to read data. Well, that's only performance is actually solved for managed accounts at custodians. But we also have to add in things like alternative assets that are typically manually tracked, and we have to sort of build a process to bring those together and add them into performance. We have to add in other accounts and have the ability to bring in other accounts via things like Plaid and other aggregators in order to see the whole picture. So we can't move 401ks at your current employer, for example, but we can see it. And based on that, we can actually build sort of recommendations in an automated way or sort of quantitatively driven way and take actions based on the entire picture, which is really kind of a neat thing that we get to do versus other vendors who are trying to who are typically very focused on one narrow area. Wealth is about people, it's about accounts and assets, and it's about kind of service professionals and advisors, and you have to bring all those things together in one place, and we do that through Farther's platform.
Well, building recommendations in a quantitative way sounds great, and definitely people, accounts, assets, advisors are all the four pillars of the business. So when you're going out to bring advisors onto your platform, if an advisor comes to work for you, do they bring all their assets to you, or can they keep some assets, with their former business, or if they're running an RIA and then part of their assets onto your platform? Is it all or none?
It's really all or none, and I think that speaks to where we are as a company. I think we have, like I said, we're hungry. We have big ambitions here at Farther to build the next great financial institution. But where we are today is we really are looking for those foundational advisors who are all in on changing this industry, and we have largely been able to recruit those types of people. So we're saying no to a lot of people too. If you are here just to sell your book or a portion of your book, or just kind of use a little bit of the technology, that's not what we're interested in right now as a company. We're interested in advisors who are all in and will bring their entire book and will contribute to the growth of this industry and our platform.
Where do most advisors who join Farther come from? Are they mostly independent RIAs? Are they from broker dealers, from wirehouses? What's the source?
Well, the good news, or I guess the good news for a company like ours, is that most places where advisors live today, they have created conditions for discontent to some degree. So we actually see a pretty even split between independents and wirehouse advisors at this point. I think just functionally right now, independent advisors are a little bit more of our focus. And typically we see a couple of modes there. One is sort of sole proprietors who are looking to scale. So it's really hard to run. You're running a business when you're an independent advisor. You're doing all the marketing, all the compliance, all these other things of all their solutions that for each one of those verticals, you have to put it all together, and it's really hard to do. So we kind of see advisors who are like, I just want to focus on clients and grow, coming to us and saying, but I want to retain my independence and sort of like self-guided kind of nature, and we're perfect for that kind of advisor. And likewise, junior partners at firms who are really who are making their leap to say, I'm ready to do go independent. I trust myself. I trust my clients. I'm ready to go. Those types of advisors are perfect for us right at this moment, and it changes over time.
I'm sure if everything changes, we wouldn't want things to stay the same. But so how do you compete? There's lots of companies out there, lots of independent advisory firms with great wealth technology, competing for the same pool of advisors to attract them to their platforms. How do you compete with other RIA aggregators or very growing RIAs like Dynasty Hightower and other firms? Who's your biggest competitor there?
I just don't think that like right now. Just to lay out the kind of like ways that we can see things, you can go to a wirehouse, you can go to another independent advisor that's kind of less tech enabled than we are, or you can go to an aggregator. Aggregators are going to be more of a kind of a financial motivation typically, and like I said, we're really looking for those those advisors who are looking to change this industry, looking to grow, and are really client focused. And that's really important to us. And I'm not saying that the advisors who join aggregators are not client focused necessarily. Aggregators are not a bad thing. Wirehouses are not a bad thing. But right now, we don't see any sort of competition for the tech-enabled like wealth play that is truly integrated from the ground up. We are the only ones at this point.
A tech-enabled wealth play.
Yep, tech-enabled wealth play with where, and I think that the key kind of differentiator there is that we are truly we are as much advisors as we are technologists and quants. We have teams of developers developing custom software and bridges that actually make a great integrated client experience every day. And you can sit down with me and we can chat about everything from asset allocation all the way down to types of programming paradigms and the like. And that's pretty rare at an RIA.
Do you have any robo-advisor or digital advisory services, or every client who comes into Farther gets assigned to an advisor, a human advisor?
Every client who comes into Farther currently has an advisor, and this is sort of like one of the things that we fix. We believe that a great client experience requires an advisor, and I don't even think that really needs to. It really, like, the types of clients we have are very complex, and even the ones who are more technologically oriented quickly find that with matters around taxes, trust and estate planning, the whole picture of wealth, and it becomes very complicated and overwhelming. And advisors are the only ones who can really step in and guide that conversation at that point. I believe that will always be true, by the way. We can always make advisors more effective. We can move certain things to client service, sort of client self-service, and that is preferred because it introduces some kind of interesting new relationship types and trust models. But advisors, we believe, are always at the core.
Oh, that's great. You said you're a multi-custodial. Is there a reason why
Yes.
did you start that way? Did you add it because of attracting advisors and being able to track their books? How do you decide which custodian to use for a particular client?
Oh, custodians, the great the great custodians. I mean, custodians are really interesting because we think of them as being uniform, but they're actually quite diverse in what they offer and the various kind of qualities of their offerings. They're these supermarkets of kind of financial awesomeness in a way. But each one is sort of different, and we look at each client and say, what are the needs of this client? And I can just go sort of like down the list: Apex, Pershing, Fidelity, and Schwab, all fantastic in their own way. And I'd say like Apex is very tech forward. Everything is fulfilled digitally, and that creates a really nice experience for the right types of clients. And then you have people who have very, very complex wealth and lending and the like. Pershing is just fantastic in terms of lending, and they are also very, very highly tech enabled these days and continuing to do so. Schwab and Fidelity are sort of like, they're just extremely well trusted. They hold a lot of assets already. They have great transition teams and really know how to make a great experience when we're onboarding advisors. So we really look at each client and say, where does this client need to be, and what services do they need, and place them at the right place.
That's fascinating. It's a very unique explanation of how to work with custodians. Do you have which one of these custodians of the four do you have the most assets on?
We currently are actually pretty evenly split across the board, believe it or not. And like, I would love to say like the reason why is this, but again, clients are driving everything that we do. So it's really about like out of the I guess out of the process of the simple process of analyzing clients and saying where do they need to be, emerges a pretty even split. So I think that shows you kind of how good the custodians are and like at various things, and each have their own kinds of niches and sort of like things that they do well and things that they have a comparative advantage in.
And it's true, they are all building out tech at a pretty fast rate because they realize that's one of the differentiators is how well their tech works and how well you can integrate those services into your platform.
Yeah, yeah. And I have to say that I think there's a lot of like old versus new, and look at what those people are doing. But I think I look at us as occupying different sort of, I guess, time phases and roles in the ecosystem. And every big financial institution is really good at what they do. They're highly optimized. They're typically, very, very and something I've noticed in the last few years is they're very, very motivated to improve, and sort of like looking for, hey, where can we plug in, and sort of like what can we do to be a better custodian? And it's great. It's an awesome time to be sort of at that level above custodians, where we're at the true kind of end-to-end client experience level.
You mentioned alternative investments earlier. Do you support that on your own internally, or do you have a partner marketplace or another vendor that you use to manage or provide the alternative investments for your clients?
The alternative investments are a really kind of are going through. It's not a renaissance. I guess it's a birth for a lot of people, versus a rebirth. And if we think about what's happened, so we have had the rise over a few years of kind of aggregators of alternative assets like Case and iCapital, and we access alternatives through them. We also have seen a lot of something that's a little bit more interesting to us and or a little bit more differentiated is we've seen a bunch of kind of point plays in assets. So everything is being securitized, it feels like these days, or everything is being granted access and democratized assets. So we actually have a robust and growing alternatives marketplace. You can access your kind of more traditional investments through places like Case, but you can also access things like direct investments in startup equity through our marketplace. And there's artwork and all of these various things that are coming up every single day. We have a team that's just sitting there looking at them and saying, is this good? Is this good for our clients? Is this something our clients are interested in? And making sure that they are legitimate investments. And it's just a phenomenal time to be able to provide access to alternatives.
That's super interesting. So you built the Farther alternative investments marketplace where your clients can invest in things, securitized assets like art or startup equity.
That's correct, and that is always growing. That marketplace is always growing because there are lots of people on the ground doing the kind of individual work in each asset class or each kind of investment area, and there are new ones every day, which is really great. And again, the kind of theme of Farther is bringing all these things together in one place, not 50 places. You don't want to have 50 logins to see all of your investments. You just want to be able to access them.
That is a problem with the industry. There's too many portals. There's too many ways to look
too many
at
portals.
Your custodian. Right? You got one for your custodian, one for financial planning, one for your held away assets, one for your insurance, one for your alternative investments, and so on and so forth. So certainly having it in one place is a huge advantage.
The TMP problem, the too many portals problem. That's a new T-shirt as well.
I'm working on an article I'm about to publish it. It's called "Don't Bring Me Another Client Portal," which is a direct quote from a broker dealer I was talking to. This is too.
I mean, it's really overwhelming, and I think the hardest part about starting a place like Farther is we are focused on holistic wealth. So that's a lot of areas that we have to cover. We were able to cover them and do it very, very efficiently. And a lot of that is a lot of planning and sort of a lot of design, system design kind of work. But at the end of the day, this is a major pain point. It seems easy, just add another portal, But then you have 16 portals and you're like, oh my gosh, there's too many portals.
It is. So being focused on holistic wealth is something we push our clients to do and push our vendors to help support. So in your drive towards holistic wealth, I saw in your article you reported you were mentioning you have 250 million in AUM. What is it now, and what's your goal by the end of this year?
So we just passed. So just a little bit of a growth trajectory kind of thing. So we started Farther, and it was just me and my co-founder Taylor, who is our CEO, and he's based out in San Francisco. We so when we started Farther, it was just us, and we know that this is a trust-based industry. And of course, we continue to grow the team, and particularly we really focus on growing the technology and building the minimal viable product to serve holistic wealth. That took us a long time. It took us basically a year and a half of doing um, nothing but actual tech to grow, or doing nothing but tech. And so we really were just aggregating kind of alpha clients and beta clients and beta advisors and the like, and we just continue to grow that. Now over time, we've gone from, like, last year we just surpassed 70 people, 35 advisors, and our, as you can imagine, our assets are growing quite quickly. And I'll decline to say what actual asset numbers are growing, but we more than 10x last year. We're on track to kind of do the same over and over again. And that's something beautiful about technology too, is you can handle a lot more scale.
If it's built right, it scales.
That's right. Building it right. It's hard, but we're on the right. We have proven that we're able to scale it up at this point, and are very proud of the team's accomplishments in that area.
So do you have an account minimum? What's the minimum a client needs to open an account on Farther? And what's your median account size?
So minimums. So on this, and this is something where we get to think a little bit about a little bit differently. Minimums are an expression of operational constraints. So I used to be an advisor, and I used to be in the ultra high net worth space, and we used to have minimums. And the reality is that we just couldn't provide a service that was the right type of service for clients below a certain threshold. We are unconstrained from operational constraints because technology moves so fast and moves so quickly, and so much of this is quantitative. So we don't have to actually look at our operations and say, we can't serve that client, which is really great. However, we are appropriate for only certain types of clients. And realistically, we are focused on complex clients. Most of our clients are kind of high net worth or high net worth. And I say near high net worth, it's those people who are in the building phases of wealth, entrepreneurs, executives who have like a lot of RSUs and stuff at big firms. So typically the marker for us is less minimums than complexity, and in the types of service that we can provide. We want to be able to provide outstanding value to our clients, and those are the types of clients we can provide outstanding value to.
One question I just had to ask, putting my marketing hat on, the domain name farther.com is such a great word, Farther. It's hard to find English words that are not specifically, don't have the word wealth in them or invest or advisors. So it means something that people can grab onto, like the word Farther. Like, that's a cool name. What did it cost you, if you want me to ask them, to buy farther.com?
So this is actually a really, really funny kind of like story. I mean, at the end of the day, it did cost us some money. It wasn't some exorbitant fee, but I think it's more so that Taylor had to actually like go do this negotiation with a business owner in Ohio, who was retiring, and was like, it was just kind of a funny situation because everyone squatted on real words in the early stages of the internet, and sort of ate them up. And that's why we had things in Silicon Valley named like Quigley and Durably and all these kind of names. So we were actually like really psyched to get a real aspirational word and negotiate hard for it.
Yeah, it's a great word. I can imagine what you spend. Knowing some other firms, listen to a lot of other podcasts like Reid Hoffman and other startups, talking about how they're telling their companies, look, you just got to buy it. You swallow your pride and buy that name. You need it. Without that word, whatever that happens to be, you will not survive. So it's great that you got that domain.
Well, I do think there is something to this, though, that like, people who grabbed the real names are like, they were innovators in their day, and we actually, I don't think, had to pay that much for it. But I think that what really took was our story. We were saying, this is what we're doing. We're building this thing, and someone who's now like kind of at the end of their career was like, this sounds great. I want to be a part of this and sort of help it along, which is a lot of the story of Farther, is going around telling the story about growth and innovation and how we're going to change an industry. And get enough good people to come along, and all of a sudden you're where we are.
Where do you see the business in 2 to 3 years from now? What can we expect from Farther in terms of success, in terms of growth, in terms of technology?
So I would say that in the next couple of years, we are really at the phase where we're hitting our stride, and we have been just had our ear to the ground constantly, and had a talented team listening to advisor feedback, client feedback, and just integrating all the things into our platform. And we are really at the point where our learning rate is still very high, but we are really just starting to scale this up right now. So you're going to see hundreds of advisors on the Farther platform, and many more clients. And I think that very importantly, you're going to see us setting the standard in terms of what it means to have a true complex wealth experience. And you're going to see a lot more personalization. You're going to see a lot better kind of performance operationally, and a lot of that flows through to your ability to act. Actually flows through to kind of returns for clients as well. So we're a really fun phase where we have put in the work to do the kind of dirty work to have a truly enabled tech enabled experience, and now we get to really start composing that into higher level things. So I'm pretty excited about what's coming Farther.
Well, you're growing pretty fast, and I know you're expanding. Your exec team just hired a new chief operating officer. Congratulations, that's a big step in your growth as you build out your executive team. And I just want to thank you for being on the program. We're running out of time. Where can people find out more information about Farther? We all know the answer, but I want to hear you say, where can we find out more information?
Farther.com. Go Farther.
Go Farther. No, it's not GoFarther.com. It's just Farther.com.
No, just Farther. It's just Farther.com. It's just
exactly.
It's just Farther.com.
You got the real thing. Farther.
You can also chant.
FARTHER.com.
Yeah, if you chant "Go Farther" in the New York area, I'll probably be near. I'll appear. It'll be like the bat signal in a way.
Well, we won't do that. Great, Brad. Thank you so much for being on the program. Really appreciate it.
Thanks so much, Craig. I really appreciate you having me on.
Hey, it's Craig again. Here are my top 3 takeaways from this episode. Farther started as a robo-advisor with their own wealth tech platform, but pivoted into more of a traditional RIA when they hired advisors to focus on high net worth clients. Brad said that they see an even split when they're recruiting of advisors between independent and wirehouse. Number 2, they are building an experience layer on top of the financial system. Now, I tried to get Brad to talk about some of the software applications they were using, but he didn't seem to want to, although he did mention they're using Plaid for data aggregation. They are multi-custodial, and they spread assets across Apex, Fidelity, Pershing, and Schwab. Brad felt that Pershing was very strong in lending and tech-enabled, which I also hear a lot about Apex. They're also very well tech-enabled and API forward. He mentioned Fidelity and Schwab, well-trusted and have great transition teams. And finally, Farther is leveraging their technology to develop recommendations in a quantitatively driven way, which now that I'm reading it, I find interesting, and I should have followed up on that, but that'll have to be saved for our next interview. So you've listened to an entire episode. Congratulations. Thanks for getting to this point. And before you go, please go to our website, EzraGroupLLC.com, scroll to the bottom of the homepage, and subscribe to our newsletter. Once a month, you'll receive an email chock full of wealth management goodness, news, analysis, information. You will not be disappointed. Thanks for listening. Talk to you all again next time.